more space on my cloud. Okay, so why is my camera looking that way? Okay. So Linda.
Yes, Lady D.
You pick the topic.
Well, I have two things that I would appreciate if they can help me with. The first one is training. What's it called? Training stop loss, because I'm experiencing a positive and then ends up in the negative, and I learned that training stop loss can help to trail it, and then at least you don't lose everything if you had gained something from the trade. And then the second one is, for example, like Queen Ade sent like this snapshot from what they call her, Kim. My question is, when do you know when it breaks? Is it the candle after the session where she gives the analysis, or when it breaks that point, or is it the first candle when it breaks that point that you start to activate the buy or the sell? Because I'm still trying to figure out. I could see the chart, but then I'm not sure what to do with it.
Okay. So that's Gold Cup.
Well, any of the charts, because I see the post even when.
No, I mean like because Kim is Gold Cup, right? Like the
yeah. She the one at the Queen Edison was Gold Cup, yeah.
Was it yesterday? I want to look at the chat and just see which trade so we can go by that.
I think it's today she sent it, but she sent it
earlier.
Today, I'll just look when did she send
Queen
it.
E, you're welcome.
She sent it.
Good morning. Morning, everybody. Thank you.
Good morning.
Good morning. I'm
sorry,
just
I'm
looking.
late.
Where did I see it? I think the CEO movement. Yes, it's under the CEO movement. She sent it at 5:54. Should I just forward the chat to you, to our own group now?
Yeah, that's fine. Let's do it.
Okay. Did I send it? Yes, I think.
Hey guys, just put on the call so people know. OTC. Those who want to join can join. Oh, okay. Okay.
OTC.
All right, so let's open with a short prayer. Father God, we want to thank you for this day, for another amazing opportunity to be grateful for new life, for the gift of life, for this gathering as a team and as a new family that we are creating here, oh Lord. Father God, we thank you that we just came from a beautiful Thanksgiving weekend for those of us in North America. We are grateful for our friends. We're grateful for our family. We're grateful for our businesses. We're grateful for good health, oh Lord. We just want to thank you that we rose up on the side of the living, oh Lord. Father God, we want to thank you for all our business partners across the globe, oh Father God, that we have something that unites us together. Oh, that as we come together this morning, enlighten our minds, open up our eyes of understanding, oh Father, and that we may continue to succeed in this business, oh Father God. We wrote a vision and made it plain, and now you may take it and run with it, oh Father God. Lord, we want to ask that you bless and orchestrate our steps. We pray for the anointing of overtaking grace and for double increase, oh Lord, in our businesses, oh Lord, whatever we started, you will give us the speed to succeed, oh Lord. And may we never relent in our endeavors. Father God, we just thank you for this day and we give you all the glory. In Jesus' name we pray, amen.
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 Cool. All right. So we tossed the coin and Queen Linda gave us our topic for this morning. We know we have 3 sessions every week. Welcome back. Did everybody really enjoy their Thanksgiving though? Did everybody have a good Thanksgiving? I know most of us
Yes,
were working.
working.
Okay, you were working, yes. Working and working. You're working and still doing your business. How powerful is that?
That's right.
Yes. So, so we have a topic for this morning. We're going to begin with trailing stop. We kind of covered that on a Friday call too. And so we can revisit that. We did not record that session, unfortunately. So let's go ahead and cover it. There are many queens here that would be able to assist us on that topic. So where do I begin? Let me share my screen. Is somebody by? I've not seen Kaka in a while.
What's making all those
What's
noises?
that sound?
That's Olani.
Oh,
Let me mute. Sorry.
okay. I'm trying to bring up my screen, guys. Okay. All right, oh, where's, I cannot see my, okay, so, can you see my screen?
Yes, Lady D.
Okay, let me first start with so the topic is, let me do a whiteboard, trailing stop, right? So trailing stop is saying, so we're in this trade. We look at the harmonics canal, it is called for a buy, right? And we're moving in this direction. And so
Yeah.
let's assume that you're going to TP1. So let's assume that you're going to here, right? And this is our stop loss. So now you enter this trade and you put your TP as this value, right? And this is now your stop loss. This is your stop loss. But then as the trade is going, you realize that, wow, this thing, every indicator is still looking like a good buy, right? So you change your TP. It has not hit TP yet. You decide that, you know what, you want to modify your TP to TP2. So now this is now becomes, this thing is Anyway, so now you move your TP to TP2. And price has now crossed TP1. Price is now around here, right? It has moved. TP1 is now on its way to TP2. Trailing stop is saying, think about it. This used to be, your stop loss was here before, right here. And now price has moved up, right? So the reason why you create a stop loss, first of all, is you're saying, this is where I entered the market right here. You're giving it enough room for price to breathe. Like in case there's a pullback, in case there's a small pullback, right? You're saying, if price gets to this point, right, I'm okay. If it gets here, I'm okay. But if it gets all the way down here, get me out of this trade. That's what stop loss is, first of all, right? But now price decides to continue going up. So trailing stop is saying, you move your stop loss from down there, from where it was, from here. Because price, when you entered, it was here. You're always giving your stop loss, what, maybe 15 to 20 pips away, right? Let's just say you gave it 20 pips from entry, where you first got into the trade. So this was where you entered, and from your entry point to here, it was 20 pips, hypothetically, right? Just stick with 20, so it's easy for us. So you put 20 pips as your stop loss away from your entry point. Now price has gone up another 15 points, which means from where price is now to your stop loss, it is now what? It is now 20 plus the 15. So now your stop loss, it means your stop loss is now 35 points, 35 pips away. So the little profit you've already made 20 pips in profit, or you've made 15 pips in profit. So the margin has now increased with stop loss. What they're saying, the reason why you want to trailing stop means price has moved 15 pips, move your stop loss from here 15 pips and put it to entry. Let's say move it to here. So your stop loss initially was here, go and modify the trade and put it to this price, because price has moved from here to here. Price has moved up by 15 points. Now you also move your stop loss by 15 points, so that if the market is reversing, my price is here, and price decides to move. Price flips on you, price starts reversing. If you had not moved your price to entry, price will continue to all the way to your previous stop loss. So now guess how much you've lost? You've lost from here, in addition, all the way down here. If you had moved it from the original stop loss to entry, that's all you'll be losing. So trailing stop is saying every time price goes up, trail the stop loss, follow the stop loss, move your stop loss also. So trailing, keep trailing. As price is moving, you also move your stop loss, okay? And when they say move your stop loss to entry, entry is saying you got into market here, because this is where our candle is, right? On this line, right here. And price has gone up. Let's say price is now, if we can reduce this, let's say price is now right here at TP2. Move your stop loss to entry. Stop loss was still down here, because everything is showing that price is continuing to go up. Move your stop loss to entry is saying you're here, move it to here, so that if this trade reverses and comes back to where you entered the market, guess what? You have not lost, because its price is at entry. This is where you enter the market. You enter the market at this zone. Price has moved and has given you more room from where you were, has gone up further. So now you're moving your stop loss to this entry. It's saying that if price reverse and hits the exact same point that you entered, it means this trade so far is risk-free. However, if you left it here, means price will come back down. Price, market can reverse, get to where you were, and cross and continue going down because you did not move your stop loss. So securing the bag, when they say secure the trade, secure the bag, it means you are, price has now gone to here, you know it's very well on its way to TP3. Secure the bag is saying you enter the trade at this line, price has gone all the way up. Secure the bag is saying, hey, your stop loss was all the way down here. Can you move your stop loss to at least TP2? TP2 will tell you, it's telling you, you were here, you have already made money from here to here. Secure the bag says move your stop loss to right here, this intersection right here, so that if the market reverses, now you're going here, but you're not by your computer to watch, and price decides to start reversing, right? Starts coming back down, and it gets to this line. Guess what? Your trade is going to exit here because you put your stop loss here. And so now this trade means you have secured those profits from here to here. The other way you can secure the profit is also by saying there are two ways. So the one is to move your stop loss all the way there. It's saying the trade can no longer go below this point because my stop loss is now here. So no matter what, if it hits stop loss coming down, I already made my $20 or I already made my $50, right? So my $50 are secured. The other way you secure the bag is, let's say you use a lot size of, let's say 0.5, and the trade got here and it's crossing over. You can modify the trade and modify the stop lot, the lot size, and say, okay, my lot size was 0.5. You reduce it now to 0.2, and that 3% of that trade is secured. That lot size is secured in the trade. So there are two ways that you can secure. But trailing stop is simply saying your stop loss was down here. Anytime price moves, please move your stop loss. When price moves 20 pips, move your stop loss up as well, 20 pips. Price moves, price continues to move here, price continues to go up, you keep moving your stop loss as well. Eventually, your stop loss will be at a profit point once prices continue to move up. You always just want to give price room to pull back and not kick you out of the trade. If your stop loss is too close, then when price does this, price is going up, it had this small pullback. If your stop loss was so close, it would have kicked you out of this trade right here. But guess how far price has continued to trade upwards. Price is still going, still buying. It had a small pullback, continued to buy high, small pullback, and continued on. So if your stop loss is too close to the market, it could kick you out when you are not ready. So you always want to give it that 15 to 20 pips because that's a reasonable amount of pips that they say. Enough pips, enough points to give the market a chance to pull back, or what you call retest, right? It comes back, then it hits that zone and then continues up, comes back, pulls, and then continues up, right? So, but if the pullback, let's say like this was a long pullback, your stop loss could have possibly kicked you out of this trade, right? I'm just saying like this kind of was kind of long, even though the trade was, but in this trend, this was reversed. This was actually a downward trend. So this is still good. But I'm looking for, let's say it was buying. Let's look for something that was buying and then we had a long pullback. So that pullback is just saying, okay, right now it has reversed, it has pulled back way more than you anticipated. So it kicks you out to protect your account. That's what they mean. For a stop loss is just to help you to say, you know what, this trade, we were expecting it to go in this direction. The market decided to reverse on us. We're putting a cushion, a safety measure to say, you know what, I know I could lose money because that's the trade. That's what comes with Forex. But I'm also protecting myself in that trade. If it doesn't go in my favor, please, please, please include a stop loss, put that safety loss. And as we continue to go in my favor, continue to move it. You move it here, it continues to buy. You move it here, it continues to buy. You keep changing your stop loss, and then you keep changing your stop loss. You keep moving your stop loss. So
Then
imagine
how do you change your stop loss in the middle of that?
you modify, you click the trade and say modify.
Oh, okay. So I just I look at my harmonic scanner here, copy whatever spot, the number on that spot, and then
No,
go
at
back,
that point, you
modify the
don't,
trade.
no, at that point, you look at that's where you need to calculate your pips right from your trade, right? Because you will not be exact. I mean, unless you can identify the value here of the trade, like let's say price is around here. Usually, first of all, there's a line that usually goes across to let you know where price is, right? So this is like price. The last candle is price. Let's look at another trade for now.
And then when you get a chance, just look at it on the phone so that I can see exactly how you're doing that on your phone. Or can you just give an insight on how you do that on the phone, on your trader phone?
Okay, and my phone is not. Naya, you know how to share your screen from your phone, right? Please. I know she was able to.
I was trying, but let me give me a minute. Let me see.
Okay.
I think you need to let her do it because
Lady
you're
do.
host.
Lady D.
Yes.
I understand this concept, but my question is that means you always modify it yourself.
Yes.
Because why I was saying so is because my understanding was that okay, there's the stop loss one which you change. So if you put it and you were not having an eye on it, that means you wouldn't, and you don't notice when you started having profit, then it's not possible to modify it when it's already in profit, right?
No, what is not possible? You can always modify the trade.
Yeah, no, I mean, my thinking was that if you put it in and you were not physically there to watch it, because that means you have to be able to be watching to see when it goes into profit. Is that correct? And then you can modify it by moving the stop loss, by trailing the stop loss. But then if you're not watching it, then you end up in a situation where it goes now to profit and it comes back down. So when I was searching to see what ways I could prevent that, I came across a video and the girl was saying you put a trailing stop, and the way she explained it sounded like you put it in and you don't have to be moving it yourself. It was my understanding. That's why I was like, oh, I need somebody to teach me how to.
Can I answer that?
Yes.
Yes, please.
I think the trailing stop is only done on your laptop. You can't do it on your phone.
Oh, yes.
You need to manually put in for the phone. You need to manually edit your. In your laptop, you can set trading stops where when it goes past a certain level, that becomes your new
Okay.
stop loss. But you can't do that on your phone.
Yes,
So if you're
that's true.
trading on your laptop,
Right.
then that's fine. But if you're trading, which most of us do from our phone, normally is the tendency is we throw our eye on our trades every now and then, you know. You don't just, we say leave the trade to ride on, but you're not going to leave the trade for 4 hours without really throwing an eye. So say you threw your eye in an hour's time and so you made 300 pounds, or let's just say 20 pounds profit. You don't want to let that 20 pounds, if there's a news came out or something happened, reverse back on you and you go to a negative. So you want to
Okay.
put your stop loss in a place where if it reversed on you, you at least make 15 pounds. So we keep
How?
saying some
Okay.
profit is better than no profit. You're
Yeah.
better off the trade reversing and kicking you out with some profit in your account than
Yes.
reversing and getting into a negative when you're struggled all the way to go to some level. Because sometimes, it doesn't hit take profit. You can
Yes.
go all the
Yes.
way close and reverse back all
That's
the way to the beginning
exactly.
and even way back.
Yes. Yes.
So
Yes.
we do not give money back to the markets. That's just it.
Yeah. So how do you do it if I want to do it on the computer? Because that might be
To be
an
honest,
easier way for me.
I personally don't trade on my computer, so I don't know how to do that. But I think Fumi has just posted something. There are lots of videos about it. But personally,
Okay.
I'm a scalper, so I don't. I'm constantly on my phone.
In fact, you can do it on your phone as well, because I watched it
Can
last
you?
time by doing yes. It's on the team app, how to do
Okay.
trailing stop losses. And he did say that he's had people, educators saying to people that you cannot do it on your phone. And he said,
Oh
no,
no,
you
no,
can.
that
So,
no, that I've watched that one. It's not the one that we're talking about. This I've watched the video you're talking about on the team app. This one is the one Lady D is explaining that
yeah,
you
it's
can
on trailing
modify
stop
it.
losses.
That
Yes.
yeah, it says trailing stop, but is this manual trailing as Lady D just explained to us, not the automatic one
She
as
means the
it is on the
automatic one for me,
computer
where it just does it by itself without
by
you touching it.
itself. Yeah.
I don't think
Is there an automatic one where it does
Yes,
it by
yes,
itself?
there
apparently
is.
there
That's what I
is.
On
said.
the
You can only do
desktop.
that one on the
For the
laptop.
desk.
For the desktop, yeah. You
For
I've
can
some
do
never
of
that.
even heard
us,
that one before.
I was going to be shocked because I know that we've always begged for this on the phone and we've never had it.
yeah.
Yeah.
Even on the lap, I never even knew it's possible on the desktop to do it automatically.
I only learned
No,
about it as
No,
well.
it is. It is.
Ah.
Okay, so
Again, most of us are like phone traders. But Linda, we could check it out and then get back to you like tomorrow or so. Unless there's
okay,
somebody here
thank you.
who has done it. And
Linda, do
then
you know how to do it on the laptop?
I don't know. That's what I'm trying to learn to
Okay.
know how to do it on the laptop.
Okay.
does anybody else know how to do it? Is there anybody on the phone, on the call who may have?
I have no idea what you all are talking about, so I'll just be quiet.
Oh, okay. More people join. By the way, good morning, Sylvia. Good morning.
Yeah, just
Tosin.
before we kick off, can I just introduce Sylvia? She's new to the team. She joined over the weekend. I'm just about adding her to the groups.
Awesome.
Welcome.
I was on a
Welcome,
call with
Sylvia.
her and
Welcome.
Tosin trying to set them up and get their heads around. That's why we're coming in a bit late. So yeah, Sylvia, welcome again. Tosin, I think Tosin has been on the call once, but I don't think I ever really.
Yay. And then there's somebody with Win, W-I-N.
I'm not sure what that is.
Anyway, whoever you are, welcome. We can't call your name. This is a small call, guys. It'd be nice to say hello, to see you all. I give you a couple camera so we know.
Let's do.
Huh? You said Lady D.
No, I just laughed that I said Lady D. It's funny what you said.
Okay, Sylvia, can you unmute at least and say something? Let's hear from you. Tosin, can you unmute? We see you on the call. I see Tosin all the time, but I've never heard his voice.
Yes.
Oh.
Now we know Tosin is a male voice.
I'm a male. Yes, I'm a male.
Okay. Welcome, Tosin. How's it been so far for you?
In fact, Georgette invited me here, so I've been joining the group for quite some time now. I've been trying to learn from you. A lot of traders, a lot of learners here. So I used to enjoy when you take it, and I've forgotten, is it Coin from Barbados or
Naya.
Yeah, Naya, yeah. So I was there when she did it. I was there when she did the other one. So it's very yeah.
Okay. That's nice. You see, so that we're always learning something new on the call. I'm glad this is eventually, Tosin, when you've mastered something or you've picked up something, you also come and share. So we're open. Like somebody just asked the trading stuff today. None of us knew. because most of us are traders by phone, right? So whoever, if let's say we had somebody here who knew, they will be sharing that. So it's an open call. Nobody is an expert. We are not the paid educators that you get, right? Your money is paying for the experts. Okay, what we do here is just to help each other simplify things, because maybe your question may be lost like on Go Live when you ask the questions. But here is like, you know, whatever we've picked up, we try to break it down or hold somebody's hands, at least give the foundation so everybody's on track for us to go to the next level.
All right, that's fine.
Yeah, any questions? No question is ever out of place. Just ask all your questions as long as we're not talking, you know, extra personal stuff, we're good. Oh, okay, and you actually came on camera too. Hello. Yes. That's nice. All right, came out of the woodworks. Okay, Sylvia, you want to say something? Queen Sylvia. Maybe she can talk. Okay, that's fine. Queen Anne, welcome. I see you. Welcome.
Thank you.
All right. Okay, so what was the next thing that we talked about? That thing. So are we good for, can we talk, is everybody good on trailing stop right now?
I'm still learning.
Okay.
I'm still learning.
And there are a lot of resources on our team app. I don't know if everybody has access to their team app yet. If you don't, make sure that you get that set up, because we have so many. Exactly what we're doing here is what is done on team app. Like Dwayne and Naya, they figured, you know what? Our team, a lot of people are having such questions, these questions, and they just simply recorded, because how many people can you talk to in a day, right? So they just simply recorded the videos and put them in that repository. So we are almost like, we're duplicating that effort, right? By having this call, because some people, maybe you go there, initially you may not even know what the right thing is to look for. You're looking for something and then you go there, you may not know that what the help you're looking for, that's what it's called, right? But we come here and then we try to simplify it and then guide you again to the proper resources or exactly what you need to clarify any doubts that we may have in the team. Okay, our goal is to make sure everybody's winning in whatever your goals are as an individual, and then whatever your either in trading or in building, then we want to make sure that we guide you to achieve those particular goals. Okay, that's the objective here, is to make sure everybody's hitting their milestones properly.
All right.
Cool. All right, so let's get back to class. What I think the next thing that Linda talked about was Kim's calls, right? Kim's, let me try to open WhatsApp that you shared on the forum here and see if I can. Okay, so this is the call. This is the signal, right? So Linda said, we have different educators, different products. So everybody may not have Gold Cup right now, but some people who have the elite package do have access to Gold Cup. And even if you don't, what if you come on the trade, on the chat group, and somebody had put this trade? I think the question is, how do you enter this trade, or how do you understand what to do with this trade? Like, right? So this is a trade, and guys, you know, if I go off somebody, just you know, come and add whatever tips. So this is a trade that an educator has called. It's an indices, and they're calling for a sell. If price breaks and closes below alert, enter on the break or the retest. So this is the alert, 3617. The stop loss is this number, and then the TP is this. They give you all the way to TP4. So there are multiple ways that you can enter this trade, right? You can enter this, you can enter in 4 positions. So trade 1, trade 2, trade 3, trade 4, or you're going to have to enter and then start moving your stop loss to different positions, right? multiple ways of entering the trade. If entering on the break with the TP, then close with a TP of 30 to 50 pips. If entering on the retest, move your stop into profit or close in profit. So if entering on the break is the candle, right? So you have the alert. What they're saying is that you enter this trade and then they've put a trigger on that trade, right? That this is the alert. So if price hits this, then you want to enter that trade. And the break of the alert is what? The candle, right? You want to look for the candle, the next candle that comes up. That's the break. When you look at stop loss, is there anybody here who trades gold cup? I wish I could open two screens.
Sorry, I just joined, so I haven't.
Any other person who uses gold cup?
No, I never trade on it.
Okay. So usually, if you remember if I could reduce, I can't open two screens right now. Okay, let me close this for a minute. Ignore my chats. Okay. So price, what was it? We're trying to sell. Let me look at my phone. I'm looking at my phone so I can see the numbers. So she called for a sell trade, right? It was a sell.
Yeah.
So we're going downwards. Okay. My mouse has reversed on me. So price is going down on that move. And then they give the values. They say TP is, let's say, right here. First TP is here. Second TP. Oh my God.
Don't come out too quick.
And let's say the fourth TP is here. Right, so this is TP1, TP2, TP3, TP4. And
Yeah.
you're entering, let's say, if price breaks. So price is, let's say, here. Let's say this is price. The market is right here, and it's going down. And so for when they make the call, they're predicting, right, based on the candles, based on the analysis. They've probably done support and resistance, and they've probably figured that, you know, price had hit this zone before. Ignore the lines, just pretend that these are straight lines. Price breaks and closes below the alert. So price has been going down. They say if price breaks, so they put an alert maybe on this previous support line, right? Or resistance line. Price had hit here once before. Had hit here once before. So they're suspecting if this price continues down, if it hits this zone, right? That's the alert for us. So they're saying enter on the break or retest. The break is, remember, it could be one candle that could break. One candle could cause this break.
Yeah.
Or price could do this like it typically does. Price could come here and then do this, go back a little bit, then come down, do this, and then before it continues, right?
Yeah.
That's what price could possibly do. Or it could just be one straight candle that comes, it doesn't really do a retest, but it just continues going down. So the alert is right here. They say if price breaks and closes below the alert is this line.
Okay.
So this alert is 3617. That's the alert on that line. If price breaks, if price break and closes below, so that candle, this candle that was coming down, if they by the, let's say you're looking at 50 minutes time frame, and the candle was coming down and it closes below this line, then enter on the break, enter on the new candle that is forming after that break. If candle, or if you're entering on the retest is saying price came down, then went back up, and then it's coming down. So now it's a retest, it's retesting this zone before it continues. So now enter or the retest, enter on the break or the retest. So you can either enter here because it broke below that line. Remember, they're giving you this trade when price is still here. It's based on a prediction. And to confirm the trade, they're saying if price reaches this previous zone that breaks what was a previous support and resistance area, if price crosses this zone that the market is going down and it hits this line, they're saying price had hit this area before, so we know it is a possible support and resistance area. So if price crosses this number that we call, then we are sure that based on market analysis, that price will continue down. So if you're looking at the chart and you're entering it, so if price now hits the break, if you're entering on the break, then that's what you should enter. If it's on the retest, which means it came, it continued, it tried to retest, and then you come back before it continues, because sometimes the candles market will play along that zone. So it could retest. It doesn't mean the trade is not going, but it could come down, go back, and then retest the call, and then continue. And that's what it is. I don't know if I explained that well. I think that's anybody else.
Yeah, Lady
You
D,
did. That was
you did.
perfect. I've never understood it before, but now I know.
Okay.
Yeah, so my question in regards to that though is like, so you wait until there's a candle that crosses that line, then you know that you've reached that, you have broken it.
Absolutely, because it's the candle that's going to confirm the move. Remember, if the candle, if it never crosses that zone, it means that trade is possibly not going to activate. Yeah. So they're saying they want to make sure that price actually crosses that zone. Until price crosses that zone, because the history is telling us that sometimes price comes around this area, right? And then it plays a little bit. And price may come here, play a little bit, stay here for a few minutes, for a few hours before it actually really crosses and continues in an uptrend. or
Okay.
or price could even get here. Instead, it broke the zone. So what they're saying is, if price breaks this zone, then we know market is going to continue to this next level. If price breaks, it could stay, it could just retest, but instead do this. So the market, every time it hits a zone, it could have continued up or retested and continued, or broke the zone and then actually reversed. So in this trade, the market was going up, got here, peaked, it reached a peak. And so let's say there was another zone here. It probably got here, and that resistance, it resisted, and then sellers took over. So it hit that wall and there was a resistance. And then, so you notice that a lot of times you're getting these pullbacks are usually when it has hit a resistance zone. And then you have the pullback. And then that's considered like either a pullback or a retest. Then it goes back again and tries to hit that zone. Now with more either force or momentum. Now, if it breaks that area, then prediction and maybe does its little thing in this area, like so, right? Then we know if it breaks, the candle breaks and closes above that line, then we know that the move is continuing up. Because this is a previous support and resistance. Remember, resistance means what? Every time you get to that place, like a barricade, a traffic stop. So when you get there, it's orange. Okay, so is it going to be red? Red is like, is it going to stop me, or is it going to let me cross that traffic light? Or there's a cop sitting there. Now you get to that place, are your flashlights on? Now you start looking, is my tail lights on? Is my headlights on? Right? You're trying to make sure everything's on so the cops don't stop you. If you're cleared, if everything is good, then that trade, if it crosses that zone, the candle closes above that line, then what they're saying is, because we know it has happened here in the past, it has happened here in the past, it has happened here in the past. So we know once market breaks that zone and the candle closes in above, then we are predicting the market will go up to the next previous support and resistance zone. If it closes, and that's why you need candles. That's why they have candles called confirmation candles. The confirmation candles are usually saying, if the candle closes above that line, then we know trend will most likely continue to the next peak. If candle is staying, if candle is closing below, then you want to wait for the breakout candle. The breakout candle is that candle, break out of that zone. It closes below that zone or closes above that zone based on where the market is going. So if we're going down, if the market was going down, then we wanted to close below this line to confirm that indeed we're going. Remember, this is market analysis, right? So this trade is probably given a future trade. So, okay, before you enter this trade, this is what you need to do to confirm that it's a good trade. And if it crosses that zone, then we know the market will then make its full move all the way down. But if it doesn't give you that confirmation, then you may want to wait for that retest, wait for it to do its thing, you know, to bounce off a little bit off of that line. And then when it continues, when it breaks now that area, then enter that trade, because we know it's going to continue based on the analysis that we've done. And also, it's not just only that, they've probably looked at long-term chart to see, like, is it overall downtrend or is it overall uptrend? Does that make sense?
Yes.
Yes, thank you.
Okay.
Yes, it does.
All right, excellent. Any questions, guys? Any questions from anybody? Okay, I'm going to stop this. All right, so we've covered trading stop. We've covered, thank you. Oh, okay, somebody's commenting on the chat. I have not been looking at the chat. Oh, okay, so Georgia, thank you for sharing that. So yes, And Money is accessible to everybody because Money is a harmonic scanner. Those 3 videos are really good. Yes, so if you guys can watch it after this, that'll be great. It will reinforce the knowledge that we just shared. So there's a video on how you train. Okay, somebody. All right. Okay, so I think any other questions, guys? Any other struggle areas that we want to cover this morning? We have 30 minutes to go and then we're done. Or do we want to go to a live harmonic scanner chat and look for?
Let's check live harmonics, please.
Money. All right, let's go to the money. Let's go to the money.
I really want to understand how to calculate on the harmonic scanner.
To calculate what? Your pips?
The pips, taking the trade, enter the entry point. I'm still trying to get those points very well.
Okay. This is a good demonstration of what we just talked about, right? Like,
yes, exactly.
So according to this trade, EUR NZD, it was selling this is a small pullback, or market may have reversed actually. But remember they called it for a sell, but right now it's pulling back. How do we know it's pulling back? Because it was a sell, right? And then TP2 and TP3 are still here. So it did not make its full move yet to TP3 based on the predictions. Now, how can we fully see if this is an overall, what kind of overall? So overall, this market is a downtrend. If you look at it from, if you zoom your chart in and you look at this picture, it looks more like the market is overall doing this, going down. Overall trend of the market is going down.
Okay.
But usually when it calls a trade, you're typically looking at that small time frame. That small time frame that it called a trade. It's done the analysis for you. But overall, if you're looking at a wider time frame, you'll see that maybe the market was the overall trend is, even in the buy, even in the overall sell, you still have buy moves and sell moves, right? So the fact that it's overall selling, overall during the day was a predominant sell, it doesn't mean that you didn't have buyers in between. And that's where that's where the scalping comes about. Scalping is saying in those little pockets where you're going to have that little buy move. So this is what a 30 minutes, let's minimize this to 30 minutes, a 15 minutes time frame. So you do understand that if you're looking at the chart and it says M15, and this is M15, it means each candle here represents that 15-minute analysis, right? Each candle happens every 15 minutes. This candle, if you're looking at a 30 minutes chart, it means this candle, it takes 30 minutes for this entire candle to do its move. In other words, when you say when does candle close, right? If it closes or opens, closing means, okay, so the candle opened. Right now it's 8:31, great. This candle is just forming. 8:31, this candle right here just formed. And this candle will take 30 minutes to do its entire move. Now, if by that 30 minutes, the candle, let's say, closes maybe above, or let's say it closed below, let's say this line, if we're looking at analysis. So that's what they mean by when a candle closes or opens. So this candle, you can only say it has closed when we've moved to the next candle. Then you determine where this candle, what was its position? Where did it close? Because the next candle is now forming. Now we determine where did the previous candle form. This candle is forming this new candle. Now we can evaluate this previous candle. This candle opened and closed at this zone, or that zone, right? So this candle is now 2 minutes into this new candle right here. Okay.
Okay.
So that's just explaining that candle move.
Queen Diane, and for the buy candle, if we're looking at the close, the close will be at the top of the candle, is it?
Yes. So if we
Okay.
just no, so yes. So if we're selling, right, the close, okay, it will be at the top. What was the question again?
If we're depending on, like, for this sale now, if it's a sale, the close will be at the top of the candle. No.
No, it just simply means that, like, let's say the trades are going down, right?
Yeah.
Fuller candles that have a better move, like, so the wicks tend to be at the bottom because you're going down, right? When it's buys, the wicks tend to be at the top going up, right? Facing the direction. Usually when you have candles like this, let's say like this one, this candle here, that had wicks on both ends. Usually when you start understanding candles, usually it's like the trend is about to move. When candles have wicks on both ends, it's like the market momentum is about to shift. Usually volume is predicted when you have flat tops or flat bottoms. You have more volume. When candles are doing this, like with wicks on both sides, market is about the momentum, the volume in the market is decreasing and momentum is about to shift in that candle, right? But when you have flat bottoms and flat tops like this, there's usually more volume in the candle, more volume in the market. Remember, the larger the candle, the larger the move, the larger the momentum. And if you look at this candle right here. Look at the volume across. Straight down. If you come down to this section, look at all three brothers were down. The alligator's mouth opens, MACDs are all down, right? Like this. It gives that volume. This is when it was right here, it was still trying to make its move, but this, most of the flat bottom, and that was right here, and right here also, the blue line crossed. And then look at the volume that it brought with the cross. It crossed over here. You still had these small candles, but then when you start having these flat bottom candles, the volume came in. The volume came in, flat bottom. So flat bottom and tops are good. It usually has good volume. And they kind of look at this on this far end here. When they're flat, when you have two end candles, most of these candles actually have a name, guys. That's a whole different class. That's a whole different thing that you guys should study. The candles have names. But honestly, for trading, for what we're doing with the tools, you just need to know only a few of those candles, like confirmation candle, doji candle, like this type of candle. They have morning star, they have evening star, they have the hammer. So there are different candles, have different names, and they mean different things. It actually, so if you took some time on your own personal studies and understood some of these, like those 5 or 6 candles, it will also really, really help in your trading journey as well. Understanding what it does.
Is that last red candle then our confirmation that it's the sell, like that we should enter?
No, actually, this is one of, but remember this trade, it was called all the way back here.
But would that be another entry point? Like if you didn't get in earlier?
It's potentially another, but it's not, it hasn't done its full move yet. And you don't want to rely only on that. It's potentially another re-entry point. But check this out. You have to come down and check the other indicators. They're still up. So they're looking like they're heading downwards, but they're not fully confirming their trade. But it's telling you that the market is most likely going to continue heading downwards, but it's not there yet. but we're starting to have indication that the market will continue down. So we had a little pullback, but we're seeing that red candle popping out. So we're expecting that the candle will continue downwards, but this was a pullback. Look at that. But the rest of the indicators are not confirming that the market is ready to do. So I will not re-enter just yet. You'll wait for the other confirmations. And that's why you have multiple confirmations to help your entry point. Because if you just jumped on this candle, what if these things don't really align? So you could be in this trade. Maybe the market is doing this. Maybe the market is consolidating. Maybe the market is just, I'm trying to find. Maybe the market is going sideways right now. I remember we're even in the cloud. It could just be doing a lateral move, consolidating. We have cloud here. So price is dancing in this zone. But we want the market to reverse. We want the indicators to align with this move. So if you were here, you probably already got out of this trade because it had pulled back. Scalpers would have probably maybe taken this. Actually, a scalper would have done this, then gotten out, and then they're now waiting for another re-entry because it's a down, it's a sell move. And this is like positioning themselves for another move. But this candle, we want to wait and see how it closes entirely, right? It just formed. But we want to wait for three brothers to be below the line for a sell. Alligator is still showing a buy move. We want the red tongue to be in the middle to show that, to confirm that the sell is good for a re-entry. And then we also want MACDs or two sisters to also be both below the line. Right now, one of the sisters is still sticking around the line. We want it to be both down, and then we will be good. So this is a trade where we could just note it down and say, come back in 10 minutes. Like when you're doing your chats or whatever, you could just say, you know what, I will come back in another 10 minutes and look at EUR NZD for you to know what's going on with that particular trade.
Gosh, like I'm the only one asking questions.
Girl,
I have another question, Lady D. One last question, please.
there's nothing
You
like
know,
one
if
last
you
question.
when you enter
If
a
you have 10
trade,
questions, ask 10 questions, okay? There's nothing like last question. Okay.
okay, thank you. When you let me say when you enter a trade and it goes past a level and is, let me say for example, you put it in and it goes the opposite way. Let me say you were expecting it to buy and it decided to start selling. And then is it okay to wait for it to shoot back up? I know that you go a couple of minus, or is it safer just to exit it, or you wait for it to go back up if you know that you literally, there's the possibility of it going back up? I don't know if that makes sense.
Okay. The only time you say there's a possibility, that's why you do your analysis, right? If you've done your analysis, right?
Mm-hmm.
And you can tell from the pattern that, let's say you've drawn your support and resistance line, and you can tell that this is like, let me do this. Let me open. You would just allow me to open something here. So, can you see this chart?
Yep.
Yeah.
Okay, so I'm using Trading View here, right? I did an analysis on this chart. So I drew my support and resistance lines, okay?
Mm-hmm.
And I marked it. So I knew when price, like I got into this trade over the weekend, based on the analysis, and it did exactly what it did. This one trade, so I think I got in here because I remember I marked it and I put the time frame. So based on previous support, I knew it was gonna go down, right? And I had the zones, but because I think I got into a buy somewhere, not far, somewhere around here, but I had put my stop loss. I gave it enough room. I knew Bitcoin, first of all, this is Bitcoin. So I know it was just a pullback, right? And I know Bitcoin is buying. They've already told us that Bitcoin is gonna go up So I don't care how bad the pullback is, he's going to buy eventually. So I'm not worried. Market analysis has already told us Bitcoin is going to get to over 20K, right? So I'm not losing sleep. I just made sure, based on this, where was the previous low? The previous low was right here. Even though the market was all the way here, I just gave myself enough room to breathe. I just went down. I said, okay, the trade is here. This was the last resistance support zone. And I just put my stop loss like somewhere here. This trade bounced off, came back, did a little thing, and then eventually when it did its move somewhere around here, or was it wherever, somewhere here, I got the trade. And then now when it hit here, I had other zones, right? I thought, okay, if price hits here, where's the next target zone? This is my next zone. So I just traded from zone to zone to zone. I know I have my areas where I say, if it crosses this zone, in between, do you see the pullbacks? In between, let's say this zone to this zone, do you see some pullbacks?
Yes.
At the trend, right?
Yeah.
So in other words, if you do your analysis and you know that price had hit the zone in the past, now if your analysis is wrong, okay, and then you get out of the market anytime you're not comfortable. If you look at price and it's not looking like your analysis is not looking correct, or the pullback is too high for your account, that's why you only trade a certain percentage of your account, right? If the pullback is too high, like there's some pullbacks that are rough on the account. If it's rough, like let's say you were here, this drop right here, if you maybe you enter this trade on the wrong side of the trade, look at how bad these pullbacks were. Look at that. Like, look at this drop. Let's say this was a downward trend, right? And you're expecting, and it did this pullback. This could have hit your account really bad. It crossed multiple zones. These are just like 2 or 3 candles that did these huge drops, right? But then guess what? You also had a stop loss. The problem becomes when you don't put a stop loss. Always put a stop loss, put a reasonable stop loss. It gives your account room to breathe, to do its move. The market, I don't care how you love the market, it could be buying, 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 but it's going to eventually pull back. The real, think about it like real-time buyers, right? Buy and sell. People like in the market, they're buying and selling. You could be selling something. There's somebody who's going to come and want to try to buy, offset the trend. They're investors. These are investors. There's somebody who's seeing opportunity when you're seeing a loss. Where somebody's seeing loss, somebody's happy. Like when people are losing their homes, investors are getting excited because you know what? They're going to buy those homes, refurbish those homes, and they just sit. They're just sitting and waiting to sell those homes again. Somebody goes to an auction, somebody sees a car like, you know, that car just had an accident. You know what? You know, people who are investors are thinking, man, I'm going to go buy that car. I'll put in $2,000 into that car, fix it up, and then they know they're going to get $5 out of that car. So while somebody else is looking at it from the straight line, the investor is never looking at that situation the way you're looking at it. So you always have to think investor mindset, right? Always, how do I, okay, if this is a bad deal, get out. Don't get emotional. Trader psychology, get out, find a new re-entry. Get out here, wait, find a new entry when the market starts doing its move. Get out if it's not looking good, and then reposition yourself, re-enter. The market is continuously moving. Get out, get back in. Like now, even though this trade is buying right here, trends are already showing that there will be, if you get in right here, is going to do a pullback. It will do a small pullback. It will probably pull back to about here, this trade. The buy move is already probably exhausted right now for now. It'll probably do this. It'll probably do a small pullback here. And then before it'll continue. But guess what? This is definitely a buy trend.
Again, because it's not good.
So to answer your question, do your analysis and then get in the market. If you do your analysis, if you know maybe your stop loss is too wide, with the wrong analysis, then it means when the market reverses, it's gonna keep dropping until it hits your stop loss. So don't give it too wide of a stop loss to protect that's why they say 20 to 30 pips. But if you know this is a move that will continue and your analysis is correct, sometimes you can actually give a wider stop loss, because sometimes this is like a fake out. This is just a fake out trying to get people out of the market. But then it will continue to do its move, to do whatever I want to do, whatever it's going to do. And then, no matter when you do your analysis and you draw your charts, your lines correct. That's why support and resistance is really good. Again, like Georgette suggested, go to those videos with where Manny talks about that bootcamp video, honestly, video 1, 2, and 3. You would reinforce, we've covered some of that information here, but it will really reinforce the information that you already have. Okay, let me go back to harmonic scanner.
I wanted to look at Odd Chef on Harmonic Scanner, but I'm not seeing that option. Is there a way to add currencies?
No, not on the harmonic scanner. So the harmonic scanner gives you its own calls. So you can add your own calls. So it goes to the market and then determines for you that these are the currency pairs that are ready for you to trade. That's the way it works. So you can't just pull your own currency. It's what is ready right now for you to trade. That's why sometimes we go to Trading View, where you can put your own currency pairs and analyze, or you go to Web Analyzer, Dr. Kathy's ECC 11. Oh, okay. Right, and then you can then pull up your own chart with ECC 11, I think so. King Evaristus, I see you.
Hi, good morning, good morning.
Good morning. I see more people added. Marcel, welcome.
We just have Marcel on the call. She literally just signed up now.
Oh,
it's too exciting. She had to jump on the call. Wow. She's been trying to sign up since Friday, but she had this name issue, had to go through support, and then they just signed up.
Marcel, everybody say welcome to Marcel.
Marcel, welcome.
Thank you, guys. Thank you.
Love it.
Welcome. Thank you. I'm excited.
Welcome.
Good. So have you been on for a minute now?
I'll say maybe 5 minutes.
Oh, okay. Okay. So, all right. Then I'm gonna then do a bonus training on the harmonic scanner back. So I think I was just trying to show. I think Anne asked the question. So, and if you were using harmonic ECC 11, you could also come here and just type. What was it? Odd Chef?
Yes.
Is that what you're looking for, Chef?
Yes.
Yeah. So you'll be able to pull it up using Web Analyzer, but I don't know what package you have. But just in case you had Web Analyzer, that's a good add-on tool for those who have only the harmonic scanner for now. This is a good add-on because Dr. Kathy's tool. So you buy the vibrator and add on London payout. That's where you get the trade signals that Dr. Kathy sends out. Not only Dr. Kathy, Anastasia, and Kevin Serrano. So the three of them use this tool, vibrator, and the London payout. The three of them are associated with the London payout. London payouts are the trades that activate during the London session at night, right? And those three educators have come together and they just call signals on the London payout. So you pay $10, or I don't know how much it is in the UK in pounds. You pay $10 and then they send signals at night. But sometimes if you're fortunate and you're on the group chat, sometimes some nights people who would just copy those trades and post on the group chat. But if you pay that $10, then you can just go there as well and see the trades. So they're trades that will kick off and happen overnight. So you just enter the numbers, go to bed, you wake up to profits, okay? Not every day, it's not 100%, because there's some days where the market does not go in their favor, right? So some
copy and paste, copy and paste.
Yes, is because they're going to give you the signal, just like what we analyzed when the trade we looked at from GoCop. So they're just going to give you a trade like that. It's going to be on the chat. You just literally plug in the numbers in your phone. They said it's a buy stop, you put in buy stop, put in the numbers, put in the stop loss, the take profit, put in all the numbers as is. They're going to give you all the numbers on the trade. You literally just enter, close your phone, go to bed, wake up in the morning, look at your history, and the trade would have either activated and is in profit, or unfortunately, you may have lessons that day. In other words, we don't say loss, just say lessons. But let's say they call 100 trades. Worst case scenario, you're going to get 75% of those trades. They're good, right? So you're going to have losses, but if you enter all 100, at the end of the day, you'd have 70 to 75% of those trades will be in profit. There have been months where they've had over 90% accuracy, and some months 95% accuracy, and then some months, the percentage drops a little, right? And a lot of times it's like this kind of holiday season where you have Thanksgiving, you have bank holidays in between. Markets tend to they're not 100% predictable, right? But there are wins and losses in between. So just keep in mind that these are real transactions based on real economical factors that are happening around the world that affects our trades, okay? All right, so that was I was just saying that this tool can allow you to pull up your own chart, but the harmonic scanner doesn't do that. The harmonic scanner just gives you the trade, and then you go by what the scanner gives you. Did that answer your question, Anne?
Yes, thank you.
All right, good.
Quincy.
Yes, dear.
What could possibly be the error you could be making when you open your harmonic scanner? You have 2 TP1s and 2s and 3s.
Oh no, then your chat is just your chat. Your chat has a problem.
Okay,
it's the way your chat loaded. You may just have to reload your chat. Because it shouldn't do that.
Yes, that's what I'm saying. You open your new scanner. So what could possibly be the issue?
Maybe it's a browser issue. What I'm saying is probably in saving, when you went to save your original settings, probably something something was faulty. Maybe the browser or something happened when you went to save it. If every time you loaded, you're having the same error, then the fault was when you were saving your settings. You may just have to go back and do a fresh news, open a fresh new chart, and then redo your settings, save it again. So because nobody else has that problem, so it's just how it was saved.
Okay.
And we can look at that afterwards, after the call.
All right, thank you.
Sure. Okay, so let's for purposes of our newbies, I think we have about 3 or 4 brand new people on the call. That's awesome. We're growing. So let's look at the harmonic scanner. I'm just going to do like one session of this, and then everybody can break out and go back to your live educators. Remember, we have live educators that are going on right now. Okay, so yes, this is a good trade. So first of all, when you come to the harmonic scanner, let me just start afresh. Okay. Okay, my chat is acting a fool, right? Okay, so typically the first time you open your harmonic scanner, the chart would look like this, right? This is the naked, when it's a naked chart, this is like the naked harmonic scanner, like nothing extra. This is how the harmonic scanner comes.
Yeah.
And this is how, this is a tool that Christopher Terry, our CEO, really helped design as well. And even at this, by just looking at the naked chart, you can still trade this harmonic scanner just by this. And when we first started, this is exactly, they say, you know, when the D's at the top, you know, it means, oh, maybe I should, let me actually teach like people. Okay, so the way the harmonic scanner works is, they say every time, the first things you look for is the letter C and D, right? But you want to focus on the letter D. Looking at the chart, you identify if D is at the top or at the bottom. If D is at the top, they're saying the market, remember the market is only doing two things, right? Buying or selling. If D is at the top, what they're saying is that the market has been buying, and now we're expecting the market to, D is a reversal point, and we're expecting the market to now start selling. If D was at the bottom, it would have just meant the opposite. It means D was selling, and now we're expecting the market to start buying. All right. Now that's just a naked chart.
Can you come again on that one, please? On your little explanation about the down, please.
Sure. So what they're saying is that if D, when the first time you look at the chart and D is at the top of the chart, what they're telling you is that the market has been buying. So there's been an upward trend. The market has been buying from this zone to this zone. And D, according to the harmonic scanner, is an indication that we're expecting the market to reverse and start going in a downward trend.
Okay.
Okay, so D is usually a point of reversal, a reversal point in the market. And if D is at the bottom, let's say D was here, it means the market was selling, and then D is saying, oops, we're now expecting the market to go into what? If the market was selling and we're saying the market is reversing, what are we expecting it to start doing? Tosin?
Buying.
Buy. So if D was here at the bottom, it means we'll be expecting the market to start buying. So multiple words for buying is buy. We're expecting an upward trend, or blue, right? Okay. Blue, up, and upward trend, right, are all symbols of buying. Okay. Downtrend, red, right, are all symbols of selling. When you hear the market is going down or you're seeing red, those are representation of a selling move where the market is going downwards. When it's blue, blue is typically symbolizing buy momentum. Market is going up, all right? Okay. Another thing that you want to look for, if D is here, you go, D is also telling you entry. So you go across from where D is usually located, across to here on your chart, you'll see entry. It's saying at the time where the scanner, this to your far right on your screen, you see something called Hugo's Way. Those are different brokers, FX Choice, GBE, Hot Forex. All of these are names of different brokers. Yeah. So the harmonic scanner is linked up with these brokers. And these brokers go to that humongous Forex market that has $5.3 trillion transactions per day and says, oh, you know what? I'm going to return to you. It scans it, and I'm going to return to you the currency pairs that are ready for you to trade. Yeah. So you can look at any of these brokers and see what are they suggesting to me right now. You know, these are different ones, have different pairs. Some of them have identical pairs because they're looking at the same market. Yeah. Right? So we looked here. We decided to pick Hugo's Way for now. and we pulled out a currency pair. And then at the top here is time frames. It's looking at the market in different time frames. So this is an M15 analysis of what it has done in the market, a 30 minutes analysis, 1 hour, 4 hours, a daily.
Okay.
Now, when the broker brings the pair, you want to focus on the ones at the top because this is the most recent analysis. Okay.
Yep.
So let's say we pull out this one, CAD JPY. You want to make sure that the pair that you picked on the right populates here on this white screen at the top. This is now your chart.
Yeah.
It pulls up here. How do you know that this pair is exactly what you're looking at? You want to come here and make sure that the broker you picked, Hugo's Way, is actually also showing you here, Hugo's Way, CAD JPY, right?
M15.
Yes, and then we want to go to M15. M15 is just saying that that's the analysis we want to look at, right? And then in this particular chart, where is D?
D is top.
So what are we expecting?
D.
When D is at the top, what is the market expecting to do now?
Selling.
Selling. Awesome.
Yeah, selling, yeah.
So the market, we're expecting the market to reverse. D is saying that there's an indication point that we're now expecting a downwards trend.
Downfall. Okay.
Another thing that helps you is that when you look at the entry, this TP, take profit.
Yeah.
If you're going downwards, if we're here and you're going down, where should your take profit be? It should be ahead of you, right? So it should be down as well. So this is D. We're expecting the market to go down. So our take profits are also below entry because it's going down, right? So take profit 1, take profit 2. This is the direction of your traffic. Traffic is going downwards. So it makes sense that your take profit should also be below entry where D was called right here. So it makes sense that your take profit should also be below because you're heading in the downwards direction.
Okay.
Look at the chart. Let me try to see if there's a chart. I'm trying to look for one that has a buy. There's no buy. Wow, everything is selling this morning. Okay, so let's look at this one. So where is D on this chart?
Which are you on? Hugo's Way?
Don't worry, just look at the chart. This is traders way.
It's below.
D is below, right?
Yeah, below you.
So if D is below, what are we expecting?
The market to start buying.
Excellent. So we're expecting the market to start buying.
Buying, yeah.
And another way to know that is that where this is D, where's our take profit?
At the top, I don't know.
Yes, because we're going what? In an upward direction. So it just makes sense that our take profit should also be ahead, above entry, right? So when you're expecting a buy for the market to start going up, take profit should also be where? Up. When the market is going down, you want the take profit to where? Be down. Because it's telling you this is, you're going down, that's where your suggested take profit should be. If you're going up, it's saying this is where your suggested take profit should be. Now, these are just two basic suggestions, right? If you look at the chart. However, one of the coolest things that this company does is they've given us different strategies. They're saying, well, this is just two ways of looking at the chart. Man, this is just the most basic way. They've given us multiple indicators to help to confirm this trade. And one of the strategies is called the perfect entry strategy. Now, you saw that original chart, right?
Yeah.
These now are your indicators that are giving us multiple confirmations, multiple ways to confirm what the scanner said. So that was just the basic scanner. And now these tools, all these new lines that you added here, these are different indicators that help us to perfect, to say, you know what, if I have these 5 things that are confirming this trade, then I should really enter the trade. Okay, let's go back to our Hugo's way. And let's say we look at CAT-JPY. So CAT-JPY, the way this strategy works is that it says, we already know that when D is at the top, we're expecting what?
Downward.
Down, excellent. So Tosin can start trading now on your own.
Not yet.
Okay. So it's now going down. And then what was the other thing that we talked about? Where is our take profit?
Take profits.
The take profit is below.
Is below entry, right? So that's double confirmation now. Now, the other things that help us to confirm this trade is that it's saying we have different indicators here. You notice that now we have some lines here, right? It says when the scanner calls a trade and is going and you're expecting a sell move, what you also want to see is you see the candles are sitting on a line.
Yeah.
Below the line, underneath the candles, is a blue line. So they're saying another confirmation is you want the line, the blue line, to cross this red line. Okay. So when it crosses, if it's for a sell, you want the blue line to cross the red line going downwards. If it's for a buy, you want the blue line to cross going upwards. Like right here, the blue line had crossed the red line going upwards. And as you can see, there were blue candles to supporting the blue move. But so far, the D has called this trade, but the line has not crossed the red line yet.
Yeah.
So right now, our third confirmation is not ready because we want this blue line to cross this red line. Remember, the harmonic scanner has already called this trade, and it has called it, it is predicting it for a sell.
Sell prediction, yeah.
That's check number 1. It called it, we determined that the position of the D was at the top. Everything else that we're doing right now is to confirm what D has said.
Yeah.
So the scanner said D is at the top. Now we're expecting for sell. So everything else that we should be looking for is to help confirm what D said.
Yeah.
Second check, price is below. Okay, so 2 checks are correct. Third check was the line. We were expecting this line to cross going downward. It hasn't crossed yet. So check number 3 is not happening yet.
Yet, okay.
We come down here. We have these 3 lines, and the way these are 3 different indicators. They have different names, but for ease of this strategy, we call them the 3 brothers. The way the 3 brothers work is the 3 brothers must always be together, must always be moving in the same direction to support the trade. So in this case, we're expecting a sell. The 3 brothers should have been all below this line. So this line is an indication that if it is above, it's a buy. If the 3 brothers are below this line, it's to support a sell.
Sell.
We're expecting a sell, but right now the 3 brothers are still above.
Above, yeah, okay.
So it is contradicting what we wanted here. So this trade is still a trade to hold off on. We come down here, this particular signal has 3 lines, it's called the DMI, but for ease of this strategy, we call this the alligator. The way the alligator works is that it says, hey, every time that you say you want to buy or sell, the alligator is going to open up its mouth. Opening up its mouth is these 3 lines are going to separate from each other.
Okay.
And then one line will emerge in the middle. And the color that emerges in the middle should support this. So there are only 2 lines, the red or the blue.
Yeah.
when it separates and the color emerges in the middle or it sticks out its tongue, you want to see the color of the trade. So in this case, we're expecting a sell. What should the color of the alligator's tongue be?
Blue.
We're selling.
Oh, should be.
This is not guesswork. If we're selling, what do we want it to be? What is the color of a sell?
Come on, let me check my notes.
What is the color of a buy? Any other person?
Blue.
Buy is blue, right? So sell is what?
Red.
Red. So if we're expecting a sell here, what should this color be when the alligator opens its mouth?
Red.
Red. So what are we seeing right now?
You're saying blue.
So would you take this trade?
We wait.
We'll wait. Excellent. The way this other strategy works is it works exactly the same way like the three brothers, we might as well call this the two sisters, right? So if the two sisters are above this line, it means it's more on a buy move. If it's below, it's a sell. We're expecting a sell, and the two sisters are where?
Above the line.
So if they're above, it means what?
It means we need to wait until they go below the line.
Okay, but when they're above the line, what does that really mean? It means it's buying or it's selling? It means it's buying, right? Somebody said it means it's buying. That's good. So, but we want it to be selling. So when they're above, it means it's buying. When they're below, it means it's selling. So we first start with D. Once we determine what D is, D calls the trade for us. D says, hey, we're expecting a sell. Now, check number one. Okay, we're expecting a red candle. We haven't seen a red candle yet, so we hold off. Has a line crossed? No, it hasn't crossed. If it crosses, what direction is it going? Where's our take profit? We identify where take profit is. We come down to the three brothers. Are three brothers above or below? Are they above? Yes, or are they below? You come down here. Where's the alligator's tongue? What color is it giving me? The two sisters, where are they? Are they above or below? Right now, let's identify. So right now we've looked at CAD JPY. This trade is saying hold off. Hey guys, for the other experts, if you can help me find a trade, let us know. Help us find any trades that we can look at right now. King, Evaristos, Georgette, guys, just look at the market for us. Help us find some trades and just call it out so I can put it up on the chat here for all of us. Anybody, if you see a good trade, let me know. So I can pull it up so we can all attempt to. So this is still buying. The market just, what time is it? Oh, this is, okay, 9:15. So right now we're waiting for the new candles to form.
JPY.
Which one?
USD JPY.
What broker?
Traders Way.
Okay, hold on. Currency. So another thing, guys, that you always want to look at, you want to look at the currency strength meter. You said USD JPY.
JPY.
Yeah, USD JPY, the Traders Way 15 minutes.
Okay, I keep USD JPY.
I think it's CAD JPY.
Oh, CAD. Okay, CAD JPY. This is good because I keep hearing USD. Like the line keeps breaking.
CAD.
I said USD.
Okay, CAD. Okay, CAD JPY. Okay, great. Because you want to trade currency pairs that, like, if you see the more candle bars, it tells you that that currency pair is really strong. And when you see lower bars, it means that that currency is currently.
CAD JPY is not ready. I said USD JPY.
Oh.
US.
CAD JPY is not yet set in there. The scanner has called it for itself, but it's still in the back.
Okay, so it was USD JPY. So right now the strengths are still too close to each other. If you look at currency strength, but we'll go look at the chart. Because the bar is just like 1 or 2 bars apart. You want currency pairs that have like at least 3 to 4 bars away from the other pairs. When they're trading like that, it's a good buy or sell against the other currency pairs. So this chart here helps us to analyze the market. And another thing that you want to do every day as a trader is look at Forex Factory. Oh, sorry, I went to Facebook. That's not what I want. You want to look at Forex Factory for news. That's one of the etiquettes that you should do as a trader. So they're telling us what all day OPEC meetings, and this is a red folder. So, you know, the market may be choppy, I guess. And then Euro, 6 a.m. So we're already at way past that time. So you want to focus, the way you look at this news is yellow folders are standard folders, right? It means these are folders that the news, even though there's news, but it does not affect the currency, okay? Any color that is not yellow, you want to pay attention to it. So this is an orange folder against this currency. This is a red folder. Then you have orange on the USD around 10:14. So in about an hour or two, USD currency pairs right now, you may want to stay away from them or watch out for them. And we just saw that the US currency pair is also weak. And then at 11, you have the AUD is also going to be impacted. Red folders are really, so any of these colored folders, red, orange, or gray. Gray is usually symbolizing, let's say holiday, bank holidays, and things like that. National holidays or bank holidays for that currency are usually represented by gray. But any of these folders right here tells you that watch out for that currency pair. If you're trading a pair that is impacted by news, know that it could either go way off or in your favor, right? You just never know, but it has impact news on the currency. Yeah. Okay, so back to Shashet said, Traders Way. You say USD JPY? Okay, so this pair right here, so if you look at this pair, this is a case where it had almost priced had already hit that point before. So price had already hit this point before, had a huge pullback, and then it's coming back again. You see now it's coming back to TP1. So this is a case of where you had another re-entry zone because it was called down here, it did a small move, did this big move, but pull back. And then if you were looking at the chart around here, it called for this buy again, and it's been buying. So if you were to analyze this chart though, let's just go by basic analysis. Where's the D on this chart?
Buy.
You said buy. Can we first, is it at below or above?
Below.
Below.
Below. So we're expecting the market to do what?
Buy.
Buy.
Excellent. Where's our TP?
TP is above.
Above entry.
Above
All right. Did our lines, what's the next thing we're looking for?
You're looking for the candle to cross the line.
The red, the blue line to cross, right?
Red.
Yeah.
So it crossed here. This is where it crossed, if you're looking at it. So it crossed way back. So we're expecting, so from now on, we're looking for what? Buy, right? Buy confirmations.
Yeah.
So the line crossed around here. Okay. So it has crossed in our buy direction. What's the next thing we're looking for?
Looking for the three brothers, or you call it the three, is it three brothers or three arrows?
Yeah, three brothers. Three brothers. Okay. Three brothers are where? Above?
Yeah, it should be above the line.
Excellent. So the three brothers are above the line right now, supporting our buy. Anybody else? What's the next thing we're looking for?
The sisters.
Alligator.
Yeah, you want to go for
Oh,
alligator
alligator.
first?
Oh,
Yes.
sorry.
Awesome. Okay. What is the alligator doing? What color do we expect when the alligator opens his tongue?
For buy
Hello?
is blue.
The blue.
For buy is
Blue.
blue.
Okay. Excellent. And we have what? Blue. And then
Yeah.
this is what? The MACDs are where?
Up.
Up. Okay. And it's supporting what? Our buy.
Buy.
Right? So now if you were to enter this trade, you will enter this trade now. This is price has already hit TP1 because this price is always where the last candle is.
Yeah.
So this is an indication. So price now is around TP1. So if you're entering this trade, you're already at bus stop number 1. So you can no longer enter your TP as bus number 1, right? So your TP will now be this next TP, TP number 2. So if you're entering this trade, you will put this number. If you have your demo accounts, this is a time to enter the trade. You can put the value for this TP2 and then enter your stop loss as well. And then we're good. Right? So now you guys know how to enter, how to identify this trade, and you can help yourself. Any other input, any other questions, guys? Do you have your demo accounts, guys?
Yes.
All right, so those
For me.
yeah, so those want to enter this trade, you can enter this trade, practice trade, and we can always share our results on the chat later on.
Okay.
Any other comments, any other feedback? King Evaristus, any comments for us this morning? Any nuggets?
Let me unmute myself here before I forgot I was on mute.
Oh, you've been talking?
Yeah.
Okay.
So let's see, now I lost my train of thought.
Uh-oh. Find it.
So just looking at so for all of the guys who are still new, I mean, looking at the charts, why it's important to wait for all of your for everything to line up, right? It's like I said, there's nothing wrong with patience, and like Queen D has stressed this enough. It's the trade might look appetizing to jump into right away just from but if you just, it might even be more appetizing when you wait that 15 extra minutes just to make sure everything is lined up. Once everything is lined up and you get into the trade, it's almost a guaranteed win trade, right? It's almost guaranteed. Like I said, markets are never, we never know what might happen in the markets, but you want to always position yourself in a spot where you end up with a win.
Okay, yes, that's a powerful tip, guys. Oh man, guys, we meet. Thank you for sharing that again. This call is open to everybody. I really love that. Patience, patience, patience is, you cannot overemphasize that. That's what is going to make the difference for most traders in this space. Just be patient. Again, you're going to learn your rhythm as you go along. We missed a powerful mentorship call this morning. Guys, please send me reminders to get off this call right when we do come on, because we have team calls that are empowering us. I think we missed it was at 9 o'clock and ends at 9:30. So I think for now we are good. We've covered 2 hours this morning. I think we are good. We meet again tomorrow. So come back. Any other questions that we didn't answer, or as you're studying, just write down any questions, and then tomorrow we can come back, or just let us know what your progress is when we come back tomorrow. So we have these calls Monday, Tuesdays, and Friday mornings. Okay. And that's our local team calls. You will find out that there are many team calls, and it's to support all these calls are to help your journey, right? There's no call that is just here to burn your time. It's just to make sure that we are all growing. All right, so this is just our smaller nucleus, but there are other calls that include the wider team. Okay, and so the chats are open 24/7. Our members are different zones, different countries. So ask questions because there's always somebody who's awake. All right, and so let's do that. All right, so on that note, I think we're going to close today's call. Take advantage of the educators on your Go Live. Watch videos. For those of you who are brand new, please, 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 please watch your academy videos, at least the level 100 videos, and stretch it to level 200. At least if you watch those videos, you know, it will make your life a whole lot easier as you go along. This is one of those things where you skip a lesson, you go 5 lessons ahead, and then you still need to come back to basics. So just make sure you don't cheat yourself, right? Watch those videos. It will help you as we go along. All right, so I think that concludes our session for today, guys.
Thank you very much.
All right, I hope it was helpful.
Thank you.
Thanks, Quinty.
Oh,
You're very
definitely.
welcome.
Thanks.
All right, guys.
Thank you, thank you,
Tosin,
thank you.
I want to see your demo trades today.
Yes, I will.
Show me 5 trades. Send me a screenshot when you're done. 5 trades.
Okay, I will.
All right. Marcel, I know you're not set up yet, so but whenever you do get set up, you know, we want to see your trades as well. All right.
Okay.
Okay,
Thank you
guys. Have
Thank
a
you.
blessed day. Jump on
Bye-bye.
all the calls. If you see calls on the chat, make sure you jump on them. They're all important calls.
Okay.
All right.
Thank
Bye.
you.
All right,
Bye
thank
for
you.
now. Take care.
Bye-bye.
Bye.
Bye.